Hi, Bruce Alamo. The equipment lease financing landscape is changing. It's changing in some very interesting ways. What we're seeing over the last 6 months to a year has been the purchase of several lease companies by banks, which has been extremely uncommon. The reason for that has been that over the last 2 to 3 years since our economic recession and our collapse of our economy, these big banks have, many of them have taken some pretty serious hits in the billions of dollars. And what they're doing now is, they've written all that down and they're now trying to look at ways to get more income from other sources. And so what we've seen is these banks purchase lease companies because they have good revenue streams, good models, existing staff, and in particular, a couple of the groups that have been purchased, one of them was Irwin Commercial, and they were picked up by Scotiabank, and also another big purchase recently closing was the National Leasing Group, purchased by Canadian Western Bank. And so that changes the landscape for all of us. What we're starting to see now more and more is vendors of these big groups calling me and saying, Bruce, these groups are not approving the same deals that they used to approve. They're now looking for minimum 3 years in business. They need some financial statements that are flowing nicely with some retained earnings and good cash flows to support any kind of a request. Certainly they're not accepting any kind of applications with any derogatory information. At least that's what I've heard from all the phone calls that I've been getting from these groups. They're now Roynet and National Leasing Group, obviously big, successful, quality companies, otherwise they wouldn't have been purchased. But what we're seeing now is the leadership of the banks slowly trickling their high restriction, sort of low rate policies through into the leasing groups. And now what's happening as it comes out the other end is that they're calling independents like ourselves and saying, hey, can you do this deal? We're just not getting those same approvals at these other groups. So, I mean, it's interesting. The economics of it is quite simple. Bank of Canada lends to all the banks at very low rates, and they mark it up, and then the banks will then lend it out at their prime plus 1, 2, or 3, whatever that is. And if they're getting it at 2% for the Bank of Canada, 1% recently over the last couple of years, it's been essentially free. Then which is why prime was so low. So if they mark it up 3 or 4 points and their default rates are so low that they can afford to lend it out at that rate, those low rates. So that's the essence of the banks. And what's happening here is now that the banks own these lease companies, in particular Roynet and National, they are dictating how they lend the money, which only makes sense because they need to ensure that they have low default rates because the rates are so low. But what they're doing now is not allowing all of the non-A grade plus credits. They're just not allowing them anymore. They're declining them, which is pretty typical of banks. So that's a real interesting shift for all of us in the leasing industry, and I think it's going to benefit everybody. So let us know where we can help. It's our own money, so we make the decisions here. We don't have a Bank of Canada or any bank governing us, telling us how to lend our money. And so it's business as usual over here. Our policies are open and free. We look at any industry, any asset. We lend based on the quality of the covenants and also the industry, and we're experts in all industries, so we understand the assets and how we can dispose of them. So we're a little freer than these groups, and we're certainly ready to help where we can. So thanks very much, and we look forward to handling your next lease.